The Reserve Bank's next move on interest rates looks like it will hang on July's inflation figures. The minutes from the June meeting show the RBA is in no hurry to raise rates, actually acknowledging a sluggish economy beyond the mining sector. And as Rebecca Hyam reports, the minutes also offer clues on potential divisions between the Reserve Bank and some board members.
In sharp contrast to a speech made by the Reserve Bank governor last week that made no mention of Europe's debt problems or the slowdown in America, there was no ignoring those risks in the Reserve Bank board's June minutes. The minutes acknowledged the recovery in the US had lost momentum, there were heightened concerns over sovereign debt in Europe, Japan's economy had been hit hard by the natural disasters, and that even the data coming out of China was mixed. There was also some caution about the weak non-mining parts of the economy, but the governor's speech described it as the inevitable outcome of a strong resources sector.
I guess that's been balanced out a little bit by the minutes today and what probably incorporates the views of other members on the board, ones that come from a manufacturing background or a retail background.
The differences have made for some lively debate among economists on the outside who are speculating about what's been happening on the inside.
The minutes reflect the discussion that occurred around the boardroom table, and that of course includes representatives from Australian business and more broadly a more broader focus than just the board staff themselves. Whereas I guess the governor is reflecting more clearly the view of the Reserve Bank.
But the view from the board was one of caution, with the recent run of weak domestic data a major reason. The minutes stated the flow of data over the past month had not added any urgency to the need for an adjustment to policy. Another reason was the volatile global environment, which has become even more uncertain since the board meeting. Global markets are on edge as the Greek Prime Minister George Papandreou faces a confidence vote in his government that may determine whether Greece becomes the first euro area country to default. So with all the turmoil abroad and uncertainty at home, the Reserve Bank's conclusion was it would be prudent to leave the stance of policy unchanged. Many economists have now revised their forecasts and are expecting steady interest rates until at least September.
It's hard to see a lot of the risk factors that are around at the moment going away by August. So unless we get a really bad inflation number, my feeling is that the rate hike probably may come later this year.
The hurdle is pretty high to hike. I think a lot of stars have to line up and there's a risk that that doesn't happen by August and is more a story for later in the year.
But right now, the story gripping investors is the Greek saga.